Let's see. You put it in your business, right?
Okay. Yeah.
Hi, we really are live. This is our first live in a long time, so we're just trying to kind of get things together.
Yeah.
And
Okay. There we go. There we go. Okay.
we are in stream. We are rocking and rolling. Boop, boop,
It seems
boop.
like it's been forever since we did this.
It does, right? It does seem like a long time.
Yep.
It does.
Okay. So we got about 6 people that are hopefully looking.
Yeah, right.
Then we have a little bit of a delay, but it's because I have my Facebook and then I have this on.
Yeah, I understand completely. Let's see.
Okay.
I'm going to send this out for just a minute to somebody who's asking me for the link. So I'm going to try to figure out how the heck to do that. Okay, good. Oh, never mind. He's on. All good. Okay, we're good in the hood.
Yeah.
Well, Gina and I are doing this because this has been the talk of the town, and honestly, not even the town, the whole state. This is not just a San Antonio or surrounding area problem. This is a state of Texas, and quite frankly, across the country issue. I think that obviously, though, I hear about it from my clients because a large majority of my clients are in Texas. So Gina and I have worked together for how long, Gina?
20. Yeah, it's about 20 something, 21, 22 years, I think already.
A long time.
Yes.
We worked together for a long time. So we have a lot of mutual clients that are either going to view this on live now or going to view this later, I'm sure. But we've been hearing from people about tax values, and I'm seeing my my payments go up, and what the heck is going on, and so we wanted to kind of share this process and how this works, and some tidbits and some tips, right, Gina?
Yep. I mean, it's new to a lot of people about taxes, but now is the time to start learning and to get educated and stay on top of it. And it's going to be one of these things you're going to have to stay on top of every year, you know.
Absolutely. And quite frankly, I mean, if you've been noticing your notices that come in the mail every April, this is a normal annual event. So mark your calendar. Tax day, income tax day around the 15th of April is just so happens to be about the time that the counties send out valuation notices. Isn't that convenient?
Yeah.
Convenient. So that being said, we wanted to come to you guys about this. So Gina, do you want to go ahead and share the screen? And we do have a PowerPoint. I will also say that as soon as the event is over, we do have a link for you where you can request copies of the presentation, as well as a really fun Excel spreadsheet that I put together to help you figure out the effects of increased taxes on your mortgage payment. So that will all be, what's that?
Okay. Do you need to request it from me, I think, to share the screen? I can't remember.
I don't know. Let's see. Oh, yeah. I do. You're right.
Okay. Okay. That's why I couldn't remember.
Yeah, we just have to remember which one. There we go. So we're going to share our screen. Okay. There we go.
Okay, there we go.
There's another success. We've been able to share the PowerPoint successfully.
I know.
So again, once this is done, we will be able to send you out. Well, you'll see the link in multiple places throughout the slides, and that will be the place where you can go online yourself and get a copy of everything you see here. So as well as the Excel spreadsheet on how to recalculate your taxes should you get a notice that your value is going up. So first things first, in the bottom of your screen is our contact information and how to reach us should you have any additional questions. And we would be remiss if we didn't ask you to please follow us on all of our fun social media channels. The only one that Gina is not currently on is TikTok because there is some controversy around it. So I guess she's steering clear.
Yeah, I know.
But there's our our names on all of our social media. We would really appreciate it if you guys would follow us over there. I know that Gina has become recently into video, and I myself have been as well. So please, please, please follow us on all of our social media, and you can keep getting educated and informed.
Yes.
All right, Gina. Would you like to do the reminder screen for everybody?
Yes. Let me see if I can make this bigger. No, probably keep it that way. Okay, so basically, reminder property taxes, tax deductions. You on your primary residence, you can get up to $10,000 deduction. So that's a good thing about having a home, owning a home, because if you rent an apartment, you can't get any deductions from that.
Right.
Investment property taxes are at full tax deduction.
Yeah.
So that's awesome. I mean, because my taxes for my investment property are like 14,000. So I can deduct that much money. But either way, whether you own a home or you do an investment, you're going to be able to take a tax deduction off that.
Which is absolutely amazing, because that's one of the beautiful benefits of homeownership, as well as owning an investment property. So be sure to check with your CPA. We would be remiss if we don't say that, because we are not CPAs. We want to make sure that you do check with your CPA and make sure you're getting every ounce of tax deductions that you can get. So I'm sure everybody that's watching, if you've checked your mail in the last few weeks, has seen this. This is your recent property value notice. Now, this isn't yours, obviously. This is an example. But this is a real example, because this is a live home in San Antonio that recently got a bill. And so what happens, Gina, if you don't protest?
Well, if you don't protest, you're basically, you're going to see your taxes go up. You're going to see a bill come in the following year in February, April, whatever, letting you know that now you have a negative balance, because the new bills that come out in October now give you the amount of tax they're going to charge you. Now, the funny thing about this particular form here, if you notice, there's nothing in here that says how much that tax is going to be.
Nope.
So, and I noticed that because every year I check my assessment paperwork when it comes in, and I look for that amount to see what the tax is going to be. This year didn't happen that way.
Magically.
So, yes. Leave it off. So, and I think they did on purpose, of course, because how high did the taxes go? Everybody's going to call screaming. So when everyone got this, you don't want to put it aside. You want to start looking at your BCAT. Go and look at your taxes and see what those taxes are going to be. It may not be there right away, but if you check it every week, maybe every couple of weeks, see what that new bill is going to be. Because they'll implement it at the end of the year, but it's not going to go to your mortgage company, so you're going to have a negative balance. So yeah, you'll have a new bill in October.
Yeah, so that's the important thing for people watching and later watching to understand, that this will become a bill in October. That's when the counties in Texas start sending out bills, is around mid-October. So what's weird about property taxes in Texas specifically, and it's from my knowledge, the only place that does it like this. Of course, I don't lend in all states. I lend in several, but to my knowledge so far, this is the only one I've seen that does it like this, is Texas. And what happens is we get our notice in April for that year's taxes. Notice I said April, which means you're already 4 months in the year of 2023, and you're not even going to see the bill until October, which is practically the end of the year for taxes starting January 1st of 2023. So literally 10 months later, you're finally going to get a bill, and you didn't even know what it was going to be until April. And if you didn't even really dissect this document, you didn't even know that until October. So that's why we're here.
And the thing about that, many people see this assessment form, they think when they look at it, they're like, oh, great, my value has gone up. My house is worth more.
Right.
But the little do they know that this is also a predetermined, I guess, an alert to let you know that now that the value went up, that bill is going to go up.
Right.
But, like I said, it's not on this bill. It's not on this assessment. So now you have to think about it and say, hey, okay, well, let me go to BCAD check my address. Let me see what's going on. What are they going to charge me? And like I said, it won't be there right away. You may get that assessment and want to go and check it like tomorrow, the next day, whatever. It won't be there right away, but it will be there. And so you want to check, that way you can get ahead of the game and know exactly what you're looking at. That's going to be the new bill next year. And even if the bill comes out in October or whatever, October 15th through December, the mortgage company doesn't have it yet. Okay. It goes out, but they are not going to adjust your escrow. They just know that there is a new bill for your taxes.
Right.
And so when that payment goes out between October 15th and December, the end of December, it's for the previous tax amount, not for the new one.
Yeah, it's really frustrating because people right now are getting notices. And when I say people, I mean people like me. Yes. Are getting notices that says, hey, you're short, your tax escrows were short. Now, the thing is, I knew it was coming. I knew how much it was going to be.
Yeah, and I knew mine was coming too.
Yeah.
And so when I saw that, I was like, okay, I understood. I knew I was going to have a difference.
A lot of people don't know this is coming. A lot of people don't expect
Yes.
it. That's why we're doing this again, because right now people are getting these adjusted notices. And then guess what? You're also getting your new tax value notices right now. So this means that this time next year, if you don't nip this in the bud now and protest before the middle of the month, then you're going to be short yet again. So let's prevent the madness. Let's stop the madness and let's kind of figure out what we can do as homeowners, right? So this is an example of exemptions. And I know it's a little hard to see because you're on live and we got 2 people on it too. But basically, to see the impact of your annual taxes, you would go to your county appraisal district website. Now, I happen to just throw Bexar County up here because bcad.org is where this particular property that I was financing, this is the real deal. Okay. In 2022, the taxes were $3,679.02. And the notice went out in April, and the April notice says, hey, your taxes are good. Your value is going up from $148,620 to $173,020. And of course, again, just like Gina mentioned, it doesn't say, and your taxes are going to go up. It just says your value is going up. And that's beautiful to the homeowner. What they don't understand is that their taxes are going from $36.79 to $42.83. And so when the mortgage company gets this bill in October, we're thinking the taxes are $36.79, except for we're going to get a bill in October that says $42.83. And then we're going to be like, oh crap, now we have to pay this bad boy. So your notice that you got a couple of weeks ago is not telling you what the effect of the value increases are, unfortunately, anymore. What they're doing is just the value notice. So please go to this website if you're in Bexar County. If you're in any of the other counties across Texas, just Google your appraisal district name. In other words, if you're in Harris County Appraisal District. If you're in Travis County Appraisal District. Johnson County Appraisal District. And you can go find your information just like this, okay?
Yeah.
All right, so homestead exemption is, quite frankly, the very first thing when Gina and I were planning this that I've noticed a lot of our clients, Gina, has not filed their homestead exemption.
I know. And a lot of people don't realize how important this is. You know, it's even more important now than what it used to be several years ago, because you would see a little bit of adjustment in your taxes and, you know, you would get a little bit of reprieve there. But now with how high the taxes have gone up, it's a big difference. It's like several $100s in some cases that you're saving just by doing the homestead.
Yeah, you miss out if you don't. And the other thing is too, remember, if you're over 65, if you're disabled, or if you're a disabled veteran, there's other things that you could file your exemptions for, not just your homestead that you qualify for. So it's really, really important that you take advantage of all of the exemptions. And for those veterans out there, because I work with a lot of veterans, your disability rating letter is how you would prove that you have a rating. And there's incremental savings. So if you're 100% disabled, guys, 100% disabled means zero property taxes.
Yes.
Zero property taxes if you're 100% disabled vet. So please, please, please pay attention to what you're qualified for. And if in doubt, go to the county website and it'll tell you. It's under the exemptions tab.
Yeah, because you're missing out if you're not filing this.
Yeah. And the good news is that even if you fail to file because you forgot, I have a client, hopefully Lucy's watching. She failed to file, and she was texting me just a couple days ago and said, "Oh my gosh, what do I do?" And I said, "Well, you need to go and you need to file it right now, because you're allowed to backdate it up to 2 years. Each county in Texas allows you to backdate it up to 2 years. So you can go do that, put it as of the day you moved in, and then it will say, is this for a late filing? And of course, if you didn't file already for 2023 because you moved in this year, then you would say, yes, it's for late filing. I need to backdate it to whatever date it is you moved in. And they'll allow you up to 2 years, which means, by the way, that if you had no homestead filed or any other exemption you qualify for, then you'll get a refund. So that's important. Okay.
Yeah.
Now, one of the things, Gina, that you had made mention to me was about filing your homestead if you don't live in the house. What are your feedback about that?
Well, what I had is I had a customer who actually did that. And he lived in his primary residence, but he was getting ready to sell an investment property. Well, apparently he had had that homestead on that investment property for almost 10 years.
Oh, wow.
And so he didn't realize that, that he had to take it off. I don't know if that's true or not, but he didn't realize that. And so what ended up happening is Bexar County came back and asked him for a certain amount of tax. They weren't going to let him get off scot-free because he was over 65, had a disability. He was literally paying like less than a couple of $1,000 on, and this was in a historic area. So he was paying very little on taxes.
Gotcha.
So he was lucky that he walked away with only having to owe like $2,500.
Yeah, but it's very serious because you want to make sure that you're filing your homestead for what you live in. So the other thing is you cannot have more than one homestead in the state of Texas per primary residence. So if you're trying to file a homestead in one county and then you buy another one in another county, you cannot do that. Okay. So just so you guys are aware, don't do that. Okay. So just remember, please file
only on your primary residence.
Yeah, only on your primary. But please, if you have not filed it yet, do it immediately. Okay, there's a couple of benefits we're going to go over later on down the line as to why you want to file your homestead and other things. But of course, the number one thing is money. It saves you money. So now, again, we were talking in terms of Bexar County just because, when Gina and I were putting this together, that's where, she primarily works. I work in all the counties across the state because I'm licensed in the whole state. But we use Bexar County as an example because we're very familiar with the site, but also because we were actually analyzing a particular client's valuation notice when we decided to do this live. And so we were just like, let's take some snapshots of the county thing right now and use it. So there's two ways to do it. And of course, if Lucy is on, which I believe she is, you're not going to go to BCAD clearly because you're not Bexar County girl, but you know where to go. And you're going to go to the appraisal district website for your county. And then you're going to go to forms. All of the counties have the forms on their website. And all of the counties will have this little tab at the bottom where it says exemptions. I know it's kind of hard to see, but it's that highlighted word right there. It all has exemptions. And then what you're going to do is you're going to download the homestead exemption form, or the over 65, or the disabled or disabled vet, or you even have the historic district tax breaks. And then what you're going to do is you're going to fill it out, sign it, and fax it in, take it in, or email it in. Most counties now all have places you can email it. Now, my friend Lucy, who's on here, please take it in person. Okay. I don't want it getting missed. I don't want you missing the deadline because we're also going to talk about protesting. And I believe she needs to do that too. But I say take it in because then it's in somebody's hot little hands. You know what I mean? But otherwise, if you want to email it, make sure they get it. And I will tell you that most counties now have really good email servers. where if you email, say, to cs@vcad.org when you're in Bexar County, you will get an automated email back that says, thank you for your email, which means they've got it. Okay. So if you choose to email it, just make sure you got the response that they've got it. Okay.
Yeah.
So that's that forms that you specifically want to do. And then here's a great example. Again, when Gina and I were analyzing for this particular client, what the savings was. And I mean, it's huge, right, Gina? It's big.
Yeah. I mean, I never realized, because like before we used to say, okay, you'll save about 30, maybe $40 or something. But look at this. I mean, you're talking about without current exemptions, about $11,000, $947 a month on taxes. That's almost what, little over almost $200 right there that you're saving just on taxes by filing the homestead.
Yeah, $947 a month without the homestead, $751 a month with the homestead. It's huge. Now, of course, the higher the value, the more the savings is, right? But still, I mean, even if it's a smaller home, you could still be saving $500, $600, $700 a year. So I highly, highly encourage you, if in doubt, check the website of the county and verify if you have your homestead filed.
Yep.
If you can't find it, call me. If you can't find it, call the county. Just make sure you have your homestead filed as a minimum, plus everything else you qualify for, right?
Yep.
Now, this is interesting because this is another notice that that we wanted to share. Now, we shared it earlier, but this didn't have the impact. And again, it's a little hard to read. I think maybe, I don't know. I can't tell because we're on the screen together and we can't tell. But this is basically showing you last year's appraised value of 2022 with the county, and it was 368, of which 282.1 was the improvements, meaning the house, right? And 85.8 was the land. Now, Gina and I have noticed, because again, we've been analyzing quite a few things. By the way, before I move on, the star is the homestead. So right here, it does confirm she's got her homestead on this particular property. Okay. But we thought it was really interesting. What the county did in this case was they said, hey, in 2023, this is what we propose. We think your actual dwelling, the house, the sticks and bricks, as we call them, is now worth less. But your land is more than doubled in value, which is insane. Okay. Because it's went from 85,000 to 198,000 in value, which is just like, we were like perplexed by this one. But the total market value went from 368 to 459. Now, here's the really important part. Again, just what you said earlier, right, Gina? Like people go, woohoo, my house is worth 459. Yeah. Except for the fact that we pay taxes on the tax value, right? This does not mean that this owner could actually sell their house for 459. This is just what the county thinks it's worth, right? For tax purposes. So, however, this is the important part. Okay. One of the benefits of having a homestead is the fact that the county can only increase your market value by 10% over the 2022 market value. So even though the notice says your total market value is 459,320, in reality, it adjusts it down below and it says, however, the appraised value is only 404.8. And the reason why is that's the 10% cap. So 368 market value, 10% of that is 36.8. That is the most that the county can increase the value on this home because it is this person's homestead, which means even though they think it's worth 459,320 at the county level, they cannot charge taxes to this owner more than a value of 404.8. Big, big difference on the tax value and what they're actually paying taxes on. So this caused a lot of confusion last year, Gina. You and I both got a lot of calls on this last year, remember? Because people were like, but wait, I thought we could only go up 10%. And the county's like, I know. That's why we have the other column that says appraised value in bold. That means that that's all we can assess taxes on. So very, very important to understand the ramifications of that and your valuation notice, which is why people we know are on this call. Now, there's 3 main reasons why you want your homestead filed. And a lot of people just think savings on my tax value, and which means savings on my taxes, right? However, there is, number one, the cap that the state has in legal code, which, by the way, when you download the PowerPoint, you're going to notice the legal code is cut and pasted for you, as well as the link. Okay, so I wanted to make sure you had the place to go to see where this was cited from. The first things first is when you file your homestead in the state of Texas on your primary residence, you have a cap on how much that taxable property value can go up, which is only 10% per year. Now, you'll notice on our previous slide, the county was like, heck yeah, we're going to go up the whole 10%. Okay. Not everybody can go up the whole 10% because it's not supported sometimes. And if it's not supported, that's when you protest. And we'll get to that. But that's the cap. And let me tell you, I had an investment property. And when I bought it, man, they shot that value up way more than 10%. It was not my homestead. So I could not say, hey, you have a cap of only 10% because it was not my homestead. So they were limited to whatever they wanted to say the market value was. Okay. But if it's your homestead, they can't. Number two, it saves you money on the property taxes you have to pay because there is a homestead limit. And what they do basically is they take $40,000 off of your appraised value, and then they tax you from the school district tax, which is, by the way, most of what you pay is school taxes.
Yeah. So let me ask a question real quick. So we're talking like it's 10% of the previous value, no more than 10% of the previous year's value.
Right.
And then with the homestead, I mean, that's part of the homestead. But in addition to that, there are exemptions that can come off, which is the 40,000, I think, right, for the school?
Right. For homestead, yeah, to the school district.
So that's two pluses right there. You get a deduction off, and then your taxes cannot go up more than 10% of the last year's price.
Your tax value cannot go more than 10%, correct. And then what they do is they take that tax value minus the $40,000, which is your homestead cap, and then they tax what's left for school district taxes only. Okay. Now, for disabled vets and for over 65, it's a little different. So you want to just consult the tax code. And by the way, you can get the tax code on your county website. So again, it's all there. It'll say it'll have the exemption section, and you can read it all in there. Okay.
Yeah.
Now, there is a third reason why you need to file your homestead that nobody ever talks about.
I know.
Okay. And it's asset protection.
Yes.
Your home is an asset. And if you do not have your homestead filed, and God forbid you get into a car accident or something like that happens and you get sued, you're not protected on your home. Nobody's going to say, oh, well, it's her homestead, because guess what? You didn't file it. So your asset protection is anything like that. Creditors cannot come after your home, except if it's your mortgage company, if you're free and clear your property tax people, because it's included in your payment otherwise. And then, of course, the IRS. Those are really the only people that can do that. Even the HOAs can't even come after you anymore, can they, Gina?
Oh, no, they can't.
They can't take your house away from you anymore.
Yeah.
They can put a lien against you. They can put a lien against it if you do something bad.
Yeah. And in some cases, if you do turn around, like I had a client who had a judgment against the house. Well, since he had a homestead, the judgment would not take how do you say, they didn't have to pay it out because they detached it from the title. Right. And so the client was able to sell, and it was attached to his name as social, but not to the home.
Now, let me give you a story. It's story time for a second. That was a good story. But let me tell you, this is important, because if you are in your homestead, you're living in your homestead, and you have this asset protection, right? Because it's your homestead and you're physically living in there. Your sofa's there. You move out. You put your house on the market, or you move out before closing, right? And you have a lien or a judgment against you. Guess what? You no longer have asset protection with your homestead. So if it was me and I knew I have something bad against me, that's a lien or a judgment that could be attached to my home, and trust me, the title company will find it. If you move out prematurely before closing, right? Before everything was said and done, then you could be required to pay that judgment in order to actually sell your home.
Yeah.
So I can speak to this personally. Personally, I can speak to this because it happened. So please do not do that also. I was a little miffed when it was not my debt, but it was attached to me because it was my spouse at the time. So
Yeah. So that, that's something to think about, because if you move out too soon, or, the creditors are looking for ways to get paid. And so they will know what's going on, and they'll send it
yeah.
to the title company right away. And there you go.
Well, and not only that, but you have a form you have to sign for the title company, because the title company is going to say, hey, sorry, as you can tell, I'm at home. The title company is going to say, hey, you've got a lien, and then what's your current address? And if your current address is not the same as the address where you're actually getting, you're selling, they're going to be like, well, it's not your homestead anymore, so now it has to be paid. So just be really, really careful. Do not move out too soon. Okay. So now you've checked all your data. You've made sure all of your exemptions are taken care of, and you need to protest, right, Gina?
Yeah, yeah. You do want to protest. Anything you can do to get information to BCAD. I mean, just hire a company, get some information. You need to fight it, because anything you can fight, you'll get something. They'll work with you. What I've noticed, because I worked with last year with BCAD, they'll work with you on bringing down your taxes. Not maybe as much as you probably want, but they will work with you. You just need to get information and start working toward
Just
that.
have to have the data. You just have to have the data. So a couple of things that I and Gina have both done for ourselves personally to fix our property values to where, because we didn't like it. There was one year, Gina, I think I was telling you this the other day when we were preparing for this, that my value went up $29. And I was like, I'm good. I'm good. I don't need to do it. Y'all just keep it as it is. Yes, I'm good. I didn't even have to mess with it. And then there was another year where they really stuck it to me, right?
Yeah.
So obviously that year I was like, I'm not good. I'm not good. I need to protest it. So the very first thing that I did before I even called, an agent to say, hey, I need help with this, was I looked at my neighbors' tax values, because it's all public information. That's the beautiful thing about tax values. You can see everybody around you, what's happening, And what I noticed was my next door neighbor had a bigger piece of property, a way bigger house, a way newer house, and they were paying less taxes because their value was less than me. So you can imagine my surprise when I pulled that bad boy up, and I was like, what the heck? And I used that as ammunition for my protest. So first things first, check that county website and just pull up the addresses around you. It's great public data. Now, be sure to check 2023, because if you're looking at old information, they're going to be like, that doesn't matter. That's last year. Look at 2023, because it's all available. Now, what about realtor comps, Gina?
Well, we can give real estate comps. A lot of times, it gets a little hard, because if you really want research done on the comparables, the comparable homes around you, it's probably better to go through a company that can do that for you, because they can give you a little bit more detail on the comparables, because it is a lot of work to be able to pull up all those comps and make sure, okay, what upgrade do they have? What's the backyard look like? I mean, there's a lot involved. I can pull simple comps and send them to you, but you would probably need to still get somebody to research everything and make sure that they make sense to be able to bring your result on your protest to a happy ending.
Now, Lucy's not in Bexar County, so I'm going to encourage her to call her agent that helped her on her transaction, because she's far, far, far away from you, Gina. So you wouldn't be able to help her. However, definitely reach out to her and find out, what the comparative market analysis looks like, which is what a CMA stands for.
Yes.
And by the way, they don't always help you.
Yeah, that's true.
Okay, so I will tell you again, going back to my real story, because I believe that stories are helpful. My comparing my property to my neighbor's tax value on the Bexar County website was what made my adjustment go down. My real estate agent comparative market analysis was not supportive at all of me going down. So I did not use it.
See, that's the thing. I had a client that asked me for comps, and unfortunately, everything I pulled up in that area was in line with what he was being charged. So,
right.
So that's why I said I don't always think that going to getting comps from the MLS will work, because the way things have gone the last couple of years, Bexar County is going to be like, see, that's why we charged you more.
That's why it's what it is. Now,
So,
there's two other things that are very, very handy if you've recently bought your house. Lucy. If you've recently bought your house, then you can use the settlement statement from the title company that says what you paid for it, as long as it supports a fight for the value. Okay. So if the value of the home is higher than what you paid for the house, absolutely fight it with the settlement statement, because that settlement statement, also known as a closing disclosure, is the proof of what you paid for the house. Okay. So that means that you have a great fight on your hands, and it's not even really going to be a fight, because you're like, look, I paid, $120 for the house and you're assessing me at $175. And the definition of market value is what you're willing to pay for something. So very, very important to have those ducks in a row for sure.
Yeah.
The other thing is, and I say underlined, underscored, italic, all that kind of good stuff, bolded, is only if you have a recent appraisal that helps you use it, right? So if you have a settlement statement because you bought the house recently and an appraisal, use whichever one is better, obviously. Okay.
Which one is lower?
Which one is lower? And use that as your proof. Okay. That's your evidence, right? You don't want to give them everything. If the appraisal helps them, do not give it to them. That's not a good thing to do.
I know.
So that's that too. So those are 4 things that you guys can use to help information gather. Take the bull by the horns on your own. Like I said, the tax value of my neighbors helped me substantially, because I had not just bought this house. So I didn't have items 3 and 4 to be able to use. Okay. The next slide is, you have to go online to protest. However, and we do have some screenshots that will be in the PowerPoint for you. However, if you don't want to put in the work, Gina mentioned this earlier, there are firms, right, Gina?
Yeah.
Who will basically, for a fee and for a percentage of the savings that they get you, will fight your value for you. Okay. I think I told you about this, Gina. I have a coworker of mine who he's been using the same company for 30 years. Okay. And he's had really good success with them. And it's been easy for him to go, hey, this is my value. And then this company takes a look at it and fights it. So I put in the Google what to search for: property tax protest companies and your city name. And they will do it for a fee and a percentage of the savings to help you fight your taxes.
Yeah. And that's what they specialize in. So, like I said, it's not that I can't do it, because I could, but it takes a little work, like I said, to research. And if I've got, I don't know, 50, 60 people coming to me for comps, I'm not going to be able to do all that research that you're wanting to do. So I can send you comps, you can take it to the company, and they can do that for you. And that way they can get you, some good numbers and really fight for you, because that's what they do. That's what they specialize in.
Yeah. And that's why I honestly thought about doing that last year when I got my nasty notice. That's what I called it, my nasty notice. But then I looked at my neighbors, and that's why I was like, no, y'all are charging me way more than my neighbor, and his property's better than mine. It's bigger house, newer house, and that's just not fair. And I won because of that conversation, just so you know. So,
and not every episode like that, it's going to happen very easily. But if you can start with the simple things, like going to BCAD, running your area, like your house, your neighbors' houses, and kind of see if there's a difference, then you've got a case. But if you can't find enough of a case to bring your taxes down, then that's where these people come in, because they can help to find those little loopholes that they can help you to get those taxes down.
Now, we also have another little hack in here too, and it's going to be after this slide that I want to share that I'm kind of excited about that I was able to find. And so we definitely want to use it now. If you're not watching from San Antonio or the surrounding areas, each area has this. So if you're not from the surrounding areas, Lucy, I already know where you are. You don't have to say it. But if you're not from the area and you're from a surrounding area and you need this information that I will go over shortly, just put where you're watching from in the comments, and then Gina or I will make sure that we can get the links out, because there's going to be some really good information to share with your protest that I did not put in here yet, but you will have it shortly. Okay, so protesting online, I think Gina would probably agree with this. When you're doing a protest, is to do the e-file protest. Am I right, Gina?
Yep.
Okay, so I made the mistake once, again, story time, where Erica gets to throw herself under the bus. I made the mistake of doing the file my protest and continue the process by coming into the office. And I was like, why did I do that? So you go to the county website, you go to online services, and there's a little click the link, and then it goes, oh, you want to file your protest? Cool, here you go. Here's your choices. You can e-file your protest. That's what I would do. That's the pro tip. Or you can file your protest and continue by going into the office. That's what I would not suggest. And let me just tell you why. It is really simple. I've been doing this 26 years. Gina's been doing this I think a year or two longer than I have. And we are intimidated by going into the county tax office to talk to these people. So if we're intimidated and we know how this works, imagine how you're going to feel if you choose the wrong radio button. So don't pull an Erica, do the right one and do the e-file. Okay. Do the e-file, which is the top one. And pretty much all the counties, I think, look the same. If in doubt, especially Lucy, we can go over this in the morning. Make sure that you're doing the e-file one where you're not having to go in person. And then you want to say, I would like to receive a hearing reminder, and I would like to receive a copy of the evidence that you're going to be using against me. Okay. You always, always, always want to know, what are they using against you? Right. Because you have your own evidence. So we want to know what theirs is. It's kind of like a little mini trial. And that's why I say, when I filed the formal one, I literally felt like I was on trial. There was like 8 people in the room, and I was like, who are all these people? So the next thing is the comments. Now, I happened to help one of my clients through this recently, and they had just bought their house for $297 on March 27th. And so when you look at the PowerPoint, that's actually what the comment section says. Now, the comment section, just so you guys know, is only like 850 characters. I said characters, not words. That's not very many words. Okay. So in this case, we just purchased the house on March 27th. Our purchase price was $297. We're requesting that our value match the fair market value of what we just paid for the house. If you would like a copy of our sales contract, I can get it to you. This was not a foreclosure or an institutional seller. That's important, okay? Because if it's a foreclosure, the value is already less when you bought it. Normally, you're getting it for a deal. So we kind of wanted to throw that in there. Obviously, throw your phone numbers in there. Make sure that you check the box that says, I would like to receive updates of the protest via text message, and make sure your cell phone number's in there, okay? Now, once you hit submit, when you hit submit, you're going to get a confirmation email that says, thank you so much for your protest. They're not really saying thank you, but anyway, thank you for your protest. And then they're going to say, any supporting information that you have, upload it or email it to us, because now they want your evidence, right? So they want to see your evidence, and they want to know how you think your value is not supported. And then you will be asked to upload, like I said, or email it out. And in my case, I did get an email, and I did not get a text. They just emailed me and a call, and they said, hey, we got your evidence. We want to discuss it with you. They did a verbal back and forth with me. It was like a little mini negotiation. And then he sent me an email confirmation and said, okay, we agree with you. And I signed it and faxed that bad boy back as fast as I could because I won my argument. So then it became the new value. So my valuation notice in April of last year was way different than what I actually ended up getting my bill for because I fought my value. Okay. Which I'm hoping all of you guys, if you don't feel like your valuation is fair, then I hope you guys take this and run with it because a lot of people are going to start protesting, I do believe.
Mm-hmm.
Now, this is the thing that I was telling you guys about. So if you're in San Antonio or the surrounding area, New Braunfels, etc., this does affect you. There is a wonderful, wonderful resource that Gina and I have. And by the way, you do too, which is the Texas A&M Real Estate Center. They are simply amazing, right, Gina, about the data that they give us.
And it's so easy to read. I mean, it really is clear cut. I mean, I used to go into this site way back and it was just so much. You couldn't really like see things. But here, they've really put a really great report in that you could see everything at a glance. It's really good.
So each metropolitan area has its own evidence report like this. This is the research of the area. And so the cool thing about this is, and by the way, I've sent this out to a couple of my clients who recently called me, and I will get it for Lucy too, because I know what county she's in. But they basically are saying and showing you the data behind where values are now compared to where they were March of 2022. So this is as recent as March of 2023 because April data is not out. But hey, this is fantastic research for you to be able to supply and upload and say, guys, you're raising me 10%, but look, year over year, average price per square foot in my area is down 2.04%.
Yeah.
So I gave this to Gina because I was like, hey, did you see that report? It just came out. Like it literally just come out when we started talking about this. And she was like, I'm using that for my fight. Because it supports it. So the average price per square foot was down from 180.57 the year before. Now it's 176.90. The year over year percent increase in price per square foot is down 2.04%. This is fantastic evidence right here. Just fantastic evidence. So this is what we want to use in order to help support our fight for value dropping. Okay. And remember, Gina, whenever you get this question from a client, I wanted to share this too. Well, I see on the appraised value though that the house is only appraised for 210, but they want 220 for it.
Well, if they want 220, it's because it's market value. This is
taxes. Yeah.
So on taxes, they kind of, I don't know how they come up with the actual values on the home, but they are two different things. Market value is out in the market, what buyers are willing to pay, what sellers are willing to sell for. Okay. And that's always going to be higher. And way back in the day, I used to say, if the market value is higher than the tax value, that's a good thing because you are actually getting some equity in your home. You don't want to be upside down. Okay. That means there's a problem with the neighborhood. There's something going on economically in that area that's not helping houses appreciate. And that's not where you want to be at. Right. So yeah, anytime anything is higher than the tax value, that's a good thing. That's a market value. That's what you're looking for.
That's a difference between what your house would sell for and what you pay taxes on.
Yes. Right? Yes.
Like there's this big difference between that. And I get that all the time. Well, I'm worried about appraised value because the Bexar County or Johnson County or wherever it is showing the tax value is so much less. And I'm like, yeah, I know. And that's how you want it. You want your tax value less than what you're paying for it. I mean, your payments.
You don't want them to find out that you paid, $50,000 more and then get taxed on that.
Right. Right. And you know what? This also brings me a reminder of something because we're a non-disclosure state in Texas. Okay. Being a non-disclosure state means that the county assessor's office does not know how much we pay for our homes. Okay. The only people who know are subscribed to the multiple listing service. So here's the important thing about that. Don't run off and tell them how much you pay. The reason I bring this up is because I'll have people, hey, I just got this letter in the mail from Johnson County and asked me all about my house I just bought. I'm like, why would you answer any of those questions? Do not answer any of those questions. They want to know how much you paid for it. They want to know, like, is there any improvements in it? Like, they're doing this for a reason. So just because they send you a little questionnaire, it's a non-disclosure state. We are not required to answer those questions.
Yeah.
FYI, just so y'all know. Okay. So before we go any further, is there any questions in the chat so far, Miss Gina?
I don't see anything. Nope, I don't see anything. I mean, if anybody has questions, don't hesitate to put in the chat.
Yeah,
you can always pop in a question in there.
Yep, pop in a question in there because we're happy to at any time. But yeah.
Yes.
Okay. So this is the hardest thing to explain to people. So I'm really, really, really hoping that we're able to successfully get this across. And if in doubt, don't hesitate to ask, okay? Because you've got our contact info, and Gina may defer it to me, and that's okay. But an escrow account is where taxes or insurance, in most cases both, are collected in your mortgage payment. What happens is, it's really simple. We take your tax bill or your insurance bill, we divide it by 12 because it's an annual bill, right? And that's now part of your monthly payment. So each month, think of it like this: 1/12 of your tax bill and 1/12 of your insurance bill goes into a savings account that we hold on to get the bill annually and then to pay the bill from that savings account, AKA an escrow account, okay? So that's what an escrow account is. Not everyone has to have an escrow account when they have a mortgage. If you put 20% down on a conventional loan, you do not have to have an escrow account. I personally think that's scary because I don't like having a big tax bill. But here's the thing that Gina mentioned earlier: timing, right? The value notices come out around the IRS tax deadline, around the middle of April. The deadline to protest is around the middle of May, right around my son's birthday. So it's actually funny. The value comes out when Derek turns, gets older, and the deadline to protest is when Jacob gets older. That's the way I think about it. So value notices in April, deadline to protest in May. The bills come out in October. All the way in October. Okay, so there's a few reasons for this. First of all, they're not due till December. So they need to give you and the mortgage company a couple months notice, right? But second, protesting is in May. So they're doing all their protesting work May and June and July and August and sometimes all the way into September before the bills come out. So there's a long lag between value notices, protest deadline, and bill because they need time to do that work. But the important part to remember is what Gina mentioned earlier. And that is that we don't even get the bill until the end of the year. We don't pay the bill until December normally. And so we're paying a bill in arrears, meaning we're paying the bill after the taxes have already been accumulating, right? So at the end of December, you will see your 2023, this December, that your 2023 taxes have been paid. Okay. Now let's just say that your taxes are $3,000, but in your tax account, in your escrow account, we were only collecting $2,000 for taxes. That means that you're going to have a shortage. That means that they're going to call you when? Right around Christmas. And they're going to let you know. They're not going to call you, but you're going to get a notice that says, this is what your taxes are. And then we're going to have to pay the bigger bill and we don't have the money. So that means that we have to collect the money from you, or we have to collect the money in your payment over the next 10 months. Okay. Which means the shortage of 1,000 plus what we need to collect for next year, because next year we have to collect taxes too. So it could be really scary. Now, when is it the scariest, Gina? When have we seen the scariest of these notices?
Actually, when they come out in February, because they tell you, oh, this is your next month payment's going to be, instead of $1,400, $1,600 now because of your, and then you get that letter that says, okay, it's going to go up to this, but you have an option. You can pay that whole amount up front so that it doesn't go on your monthly payment per month.
Just like this. I can write a big fat check, or I can deal with the increased payment, right? So,
and
but
the
it's
problem is
on new homes.
Huh?
New homes also.
Oh, yes.
They get really, really messed up for a few years. So if in doubt on the new homes, we can always help you with the escrow. My conversation with people buying new homes is very different from this conversation, because they need to be aware of how it works, because the taxes are only assessed on the land. And now you've got a big old fat house on it. So it makes a big difference. But here's the bottom line. When we get the bill in October to pay it in December, as of October, we've already been collecting too little. And we didn't even know it. We didn't even know it. Okay. So like I said, when I got my notice, they did not even know that my taxes had gone up. I knew. I was already putting money away. This was not a surprise to me. Okay. I was putting money away because I got the notice. I fought the value. I got the notice, and I knew that I was eventually going to get a bill. So now I got it and I paid it. Okay. But I had the money set aside in savings, and I was prepared for my increase in payment for 2023. But it's the timing sucks. Quite frankly.
It does.
It sucks.
Well, I'll tell you what I did, because when I got my notice in March, because I usually get it somewhere around the end of March or so.
Yep.
I got it. I knew, excuse me. I knew, thank you. I knew that the taxes were going up. So I went into BCAT and I saw how much the taxes were going up. So I saw my amount, and I went back to my mortgage company, kind of just saw, okay, what's the difference? What they were paying out, what they're going to pay out this year, and what this new taxes are. So it was a difference of, I think at the time it was like 1,000 something. And so what I did is, as soon as I was going to make my next payment in April, I just divided that $1,000 into April through December, and I was just going to make that little extra amount of money. So I was making like $150 a month extra to my escrow. Yeah. And that's the way I did it. I got on the ball because I knew if I waited any longer, I waited till December, by the time February came around, they're going to tell me I'm upside down. I owe them $1,500 or put on my payment.
Yes.
And like I said, remember, even if that happens, you think, well, it's okay, let it go on my payment. But then at the same time, you're getting the new bill for the taxes. So it could be double increasing your mortgage payment.
That's right. That's right. And the notices, like I said, for 2023 taxes will come to you between January and March of 2024, letting you know we have a shortage that you, by the way, already knew about. You got notice in April.
Yeah,
okay.
Exactly.
And then you got a reminder again in October. So you already knew about all this stuff. And so that's why, like, when people go, oh my gosh, I had no idea. Yeah, you did. You just didn't read it. So that's why we want to talk about this. Number one option is you can pay cash for the shortage. In my example that I have for you on a spreadsheet that we're going to show before we go away is $3,600 shortage on my example. And by the way, it's a real example. It's a real house taxes. Okay. And you can prepare for that increase monthly in January of 2024 of that extra $300 that you know you're going to be short. Okay. The other choice is that person, the owner, could avoid paying the shortage of $3,600 out of pocket, and they can roll it into their payment. However, please remember, they're rolling the shortage from 2023 and the new tax bill that they're going to have to pay for 2024 into the payment. Now, most servicers will roll the $3,600 in our example over 10 months, which means you're going to be spending $360 over 10 months to pay the servicer back for that $3,600 shortage. And then they're going to have to increase your payment also another $300 permanently, because that's how your taxes are actually going up, right? So you could either give them $3,600 now, here's the $300 in my monthly payment, or you can roll the $3,600 in, which means that now your payment's going to go up $660 for the next 10 months. And then it will drop by $360 after that shortage is paid off. Okay. So this is really happening to people that did not look at their notices. So that's, again, why we're doing this. And let me go to the next one. So this is the spreadsheet. This is an example of the spreadsheet and what you're going to have access to that I did. So just to kind of show you, again, it's very tiny, but you've got your new taxes that'll be listed out. You've got your old taxes that are listed out. And remember, January 1, if you're not going to fight you're not going to protest your taxes right now, it's already telling you what your taxes are going to be on the website. Okay. So we already know what they're going to be. You just plug in the new taxes, you plug in the old taxes. It's going to show you automatically what the difference is, your new versus your old monthly. It's then going to show you cumulatively, starting in January of 2023, 4 months ago, what you should have been putting into your escrow account. And then February, and then March, and it's going to total it up for you so that you know by December, by the end of December, this person, this is a real life example, like I mentioned, this person already knows what their options are. They're not even having to be told by their mortgage company like this. They know because they're using my spreadsheet. So when the escrow analysis is all said and done, and they won't even hear from their mortgage company until March, January, February, March of next year, when they already know that this is happening because we've already given it to them. Okay. So when the escrow analysis is done, they're going to get a bill for $3,600 and they're going to be told you can either pay it now and only have your payment go up $300, or you can go up $660 for the next 10 months and then only go up $300. It's up to you. Except this person can protest too. They could protest and avoid this if possible. And I think this person is, because they have a recent appraisal that's going to substantially help them.
Yeah.
So this is just an example of the spreadsheet, but it is one you can plug your information into. And if you have any questions or issues with it, you can just get back in touch with me because I wrote it. You guys have our contact information because it's at the front and the back of the packet. But this is the ability for you to do it. And by the way, here is the link at the bottom. Visit, it's going to be bit.ly, meaning B as in boy, IT as in Tom, .ly / protest taxes 2023. That's the link for this presentation and spreadsheet. Mm-hmm. So www.bit.ly and then / protest taxes 2023. Gina, do you mind popping that into the chat?
Yeah.
Thank you. And then that way you can just put in your name and your email address and it will send you the link for the data so that you can start practicing and playing with it. And I highly recommend that you save this spreadsheet because every couple of years, the county decides that they want to go on your taxes and you need to be armed and prepared for it. Or at least fight your value, right?
At least fight your value.
At least fight your value. So there are certain people that are going to be watching this video or now, I don't know. Thank you for putting that in there. I appreciate it. That will get a refund at the end of the year. And that's because the tax bill was less than what was collected monthly. And that is normally people that have built a house. Typically what's going to happen is you built a house in 2023 and your bill came in less than what we collected from you monthly. And you're like, woohoo, I got a check from my mortgage company and I can go spend it. And I'm so excited. Well, I can also tell you a fun story because I've got lots of them, where a client of mine and a friend of mine had received this escrow check. And I told him not to spend it even before he got it. I said, you're going to get an escrow refund. Here's why. And he said, no problem. And then they got the check in January. And he was like, guess what I got today? And I was like, what? And he goes, a big screen TV. I got the 80-inch big screen TV. And I was like, why did you get that? And he said, well, because I got my escrow refund. I said, you don't remember us talking about that? You were not supposed to spend it. You're supposed to send it back. And he was like, no, they said it was my money. I'm like, yeah, because they don't know your taxes are going up yet. They have no idea.
Mm-hmm. Yeah.
So my suggestion, one of two things, send the money back to the mortgage department and say, please credit this to the escrow account because you're going to get a bill soon. and it's going to be in October. and then you're going to be short, and I want you guys to have it. Or if you're good at saving, put it in a savings account where you're not going to touch. Okay.
Yep.
Just don't touch it. Just leave it alone and put it in that savings account. All right. This does happen more often than not, but especially with new homes. So now, go ahead, Gina. You going to say something?
Oh no, I was just gonna say I've had a few clients had that same problem, and like I said, it's nice when they get the money, but as soon as, and this is the thing, a lot of people will tell me, well, why did the escrow, or why did the mortgage rep just tell me it was my money? Why didn't they tell me? Well, just think about it. These reps are hired. They read out of a a spreadsheet or something, or their script, whatever they need to say. They don't know. They don't know what an escrow account is. They don't really know what the money is for. I mean, they're told to tell you it's an overage. Any more than that, they don't know. So if you're getting upset at the person because they're telling you something and you're like, well, they told me this, the way the mortgage companies say, or what they reply back with, is they say, you should know. You should know that.
You gotta notice.
Yes.
You gotta notice in April.
Yeah. And
go ahead. Sorry.
And so that's sad, because I get it, because someone should be knowledgeable. The people you call should be knowledgeable. But really, you're the homeowner, so you really have to be educated on these notices when they come out, your taxes, everything about your home.
Yeah. And the other thing that I would like to add to that is that, and this is really sad, and I know that Gina, you're going to confirm this for me, but the new builders, when they're quoting taxes, they generally underestimate them.
Yeah, they do.
I've seen some estimates from loan officers that work for a builder-owned mortgage company, and they have, not always, but many times, I see substantial underestimation, and it's because the numbers look good. It looked great, and it made it look like your payment's going to be amazingly low for a long time, and then you're in for a really nasty surprise when the tax office figures out there's a house there, and then the tax bill comes out. And then you're like, you don't even find out about it till 4 months later, 6 months later. But it's not a pretty sight. And I've had people call me that are going to be in pre-foreclosure before saying, I don't know what to do. So you do not want to get stuck in that situation. And so arm yourself with knowledge. The tax rates are on the county websites. It is right there as public knowledge. All you got to do if you're buying a new home is take the purchase price, multiply it times the tax rate, and that's your taxes.
Yeah.
Now, you could subtract off of the homestead if you want to get really complicated, and subtract the $40,000 off the school district tax rate, and then you'll have a really accurate assessment. But if it's anything substantially lower than what the tax rate times the purchase price is, you're underestimated pretty substantially. So that's why I use a worksheet, and I share my worksheet with my clients on new homes to make sure they understand where we're setting it up at. So
yeah, it's better to be safe than sorry, because at the end, they're going to send you something, and you're going to be pretty upset because you got a bill that's going to change your payment in the next 30 days, almost $200, $300, whatever, $400 more.
Yeah.
And wow, that's hard to swallow.
It is hard to swallow. Absolutely. So I want to really quickly, and I know we're over time, but I would like to show everybody the worksheet. And so I'm not sure. I guess I stopped sharing because it was the presentation. So let's just do this. Let's just show everybody the worksheet if possible. I don't know if you can share that part of the screen. I know, again, it's very hard because there's three of us, the worksheet and Gina and I, but this is the worksheet. And so I made it really easy. I'm going
to get off so you can show it real quick.
Okay. It's really easy because everything in yellow is you to put in there. So it's your property tax value is the first thing you put on there. The tax rates, you pull those from the county website of each individual entity. And it may not be San Antonio River Authority. It may be something else. And you can change the name of that field if you want to, depending on what county you're in. So like Lucy, I know you're not Bexar County, so you would just change it to your county name, your city schools, city name right there, school system. And basically all of these are the individual tax rates that you pay on those specific entities. Some of you are in a MUD, and that's a municipal utility district, which can be really expensive to live in. So you can just insert it somewhere else, like on the health system or something like that. It totals it up for you. It's a sum section. And then what happens is your taxes will auto-populate. So that's how you can see where everything is assessed. Like you've got school taxes are $7,400, City of San Antonio is $2,800, Bexar County is $1,400, health systems $1,400, etc. And then it totals it up for you and tells you what your payment should be for taxes. The thing is, then it says input your taxes for the previous year, and then it's going to show you the previous amount that were in your escrow account for taxes, and then what should be. So you're going to see what it was and what it should be, and then you're going to see the shortage, which is $300 in this case. So this is the exact live real scenario that we were looking at for a client. And then at the bottom it says, so when the escrow analysis is done, $3,600.72 can be sent in, and the payment will go up by the shortage amount only, which is $300. Or the new payment goes up to cover the difference. Now, there is a little yellow box down here that you're going to see when you open up the shared document, and it says 10. The deal is, though, is that some mortgage companies are 10, some allow you to go to 24, some allow you to go to 12 months. It's just however many months they're going to allow you to do the shortage by. I can tell you that mine was 10 months. So I could spread my shortage out over 10 months or pay it in full. So that's the same thing here. So it gives you a couple of reminder options. And so it will tell you the difference in the new versus the old $300, which means you should start sending an extra $300, right? In your payment pronto, because that's what your new tax bill is going to be up by $300. And I know this is an extreme case because the taxes went up a lot. This happens to be an investment property, so it went up a ton, but it's the same thing for everybody. So you would just insert your information here. You get it off the county website, what it is, what it was on the taxes, what your tax rates are specifically, and then what the differences are for you. And that way you can see everything in real time. So the moral of the story, as I say on here, is if you know your taxes are going up, start saving now to prevent having to write a big check or having an even higher monthly payment increase later. So that's the moral to the story. So hopefully this helps you guys to be able to, make sense of it.
Yep. Yeah, I hope that everybody is able to get that information. But like I said, if some people don't have Facebook, I'm going to try to download this video also and send it out to my database so they can actually look at it with the links and everything. So,
right.
But yeah, this great information. I mean, I know we're only talking about 10 days, 12 days or so till the protest, the deadline. So do it, I mean, just get started. I mean, I already did, so just get it done. But yeah. So anyway, yeah, this is it. We're good to go. So if anybody has any questions, just message us, or you got, the replies. And like I said, I'll get everything out with the video so that people can review on their own time if they didn't make it.
Cool. Yeah. And if anybody has any questions about the Excel spreadsheet, if you're confused by it, please don't hesitate to reach out, because it can get a little confusing sometimes, and I'm happy to help you with it.
Well, put the information up again so it's at the end for the
That's fine, Lucy. I'll talk to you tomorrow.
Yeah.
And thank you, David. We appreciate the comment.
Yeah, thanks a lot. Okay, well, we'll let it go. I guess that's it.
Sounds good. And we're going to do more of these every month. So we'll see you guys soon.
Yeah, we'll see you soon. Okay, bye-bye.
Bye.